Tuesday, 7th of March, we're looking at gold. You're probably aware of this big potential cup and handle pattern, but it's been playing out for months. We don't know when it will get going. It's not particularly relevant because unless you're buying gold and holding it for years, it's not really a day trader issue. Going to the weekly chart gives us some perspective of the nearer term. This is over a period of about 3 years. Gold's really only gone sideways. And then we go to the daily chart. We're seeing a recovery in gold recently. The moving averages are just flatlining because we've been in a sideways trend for such a long time. The green 500, red 200-day moving average is both flattening out, but the green 500-day moving average did its job as a support level. So it looks like traders and investors are still paying attention to those longer term moving averages. Now, I did identify this very bullish candle. We were short all the way down. Look, big bearish engulfing candle. That was the sell signal. If you remember, we jumped into a short position. Nice move down the following day. So we had a short selling strategy after I saw this bearish engulfing candle, and that certainly worked. Another bearish engulfing candle there, and then down we went. We got a hammer, which indicated perhaps we were going to trade sideways. Dipped a little, looked like the bear trend was resuming as we hit the 500-day moving average. Then we got this bullish candle. Now, I didn't get bullish straight away when I saw this candle because it looked like it could be a bounce in a bear trend, and we had this fib resistance level around 1828. It's actually that one there, 1828.29, and it did hold on the initial bounce. So I didn't get bullish until the following day when we broke above there, and that was a beauty. Then we had a pullback to the support level at 1829 and 1828. It did the job, and off we went. So we have a long bias in gold at the moment. For now, I think the recovery can continue. This is a decent looking target, the sort of 1865, 1870 area. We've got the 50-day moving average up there, but I still think gold can go up. If we could hold above sort of 1845, 1840, that looks like a decent support level in the short term at least, then we can continue that recovery. But if you said to me, where is gold going to be in 2 weeks' time, a month, 2 months, I really wouldn't know because we don't have a decent medium-term trend to follow. That's the problem. Now, silver on the monthly chart is probably messier. So we'll go straight to the weekly chart. And again, it's mostly sideways with a slight negative bias. We've got some lower peaks and lower troughs, but only just. Again, moving averages flattening out, 50 the black, 100 the blue, red is the 200 and green is the 500. So all flattening out, really very little to go on. So I've been focused very much, again, on the short-term charts. The daily isn't giving us much. We've pulled back to the 61.8% fib. Bullish candle again there in silver, the same day that we had the bullish candle in gold. So I did get positive, I was suggesting buys there. This actually worked quite well. We dipped to my support level at 2075, 2065 and took off. So I've got a long bias right now. We're going to need to hold the 200-day moving average, which is at 2095. So for now, I think we can have a little bounce and maybe a little run to the upside. But if you're a subscriber, you're getting the levels every morning with my trade sheet.